Now, the recent rally in the stock market hasn't just attracted the bulls. There are plenty of skeptics who are increasing their bets on the fall of shares. Joining us now with some specific names is Joseph Parnes of Technomart Investment Advisors. He publishes the investment newsletter Short Text, in which he recommends both short and long stocks. Joseph, thank you for joining us.
Thank you for having me on.
First, explain a little bit about your short selling strategy and why you go after short selling, and what is the strategy for actually picking these stocks?
Well, in my view, short selling actually is very good for the market because it provides liquidity to the market for the trading as a whole. Definitely, when the stocks go up, many of them, of course, are based on emotional anyway. And we try to select the companies to go short when we realize that there is deteriorations on the fundamental and technical.
So you're looking at things that have been emotionally pushed up? How do you gauge that?
Overextended, perhaps. So sometimes you have to gauge them perhaps 2-3 quarters from the inception when there has been some sort of a push on the bull side to bring the stocks up. We try to locate maturity of the stock when it reached that plateau. And in other words, possibility that it has saturated with all the good news has already been discounted into the stocks. Of course, no companies can maintain or sustain stability or at least continuous profit growth that it has been projected before. There comes a time when that growth has sort of at times to slide down.
But when you actually start looking for these short opportunities that stocks are going to fall, is it really just a earnings picture that you're really zeroing in on?
It will help very much to combine both technical and fundamental, because stocks may fall if they have a very good fundamental behind them on the ascent, what I call retractions, that there may be a channel for the stocks to go up. Therefore, in order to go up higher, they may have retractions or profit taking within that channel. That's not a good selection of the shorts. You want to make sure that you can select a stock that has some sort of a fundamental deteriorations, possibility that has already been discounted, plus the technical versions of the sell-off into the stock to give you a better footing to really maximize your profit, not just 1% or 2% or 5%, but rather stay with it to really retain the maximized profit that you can get from it.
Okay, we're going to talk about some specific ideas. We want to stay with Joseph. We have to take a quick break. Up next, XM Satellite stock. It's gained 40% in the last month. So why does Joseph Parnes think it's headed for a fall? We'll find out right after this. Joseph Parnes of Technomart Investment Advisors is still with us. Joseph, let's go to one of the companies that you've been betting short on. This is XM Satellite. This is the satellite radio company. Tell us why you're betting that the stock is going to fall further. I mean, it's actually increased about 40% in the last month.
Very well said. This company, from its inception a few years back, was a very an industry that was very new. It really attracted a lot of investors to start accumulate the stocks, and the stocks kept on going up. It took our attentions sometimes in March of 06 when it reached around $20 or something on the way down on the retraction, and we showed it at that time on the assumptions that possibility there has been saturations into the marketplace in their subscribership as a whole, and we were correct on that time. From $20 or so, the stock fell up to 10. We covered in that position. We actually said in the market alert at that time to go short around $20 and cover short between 14 and 15.
Okay, actually, now let's just take a look at the chart. So
exactly.
Right now you're talking about $20 a share, right about there.
Exactly, around March. And as you can see, a tremendous amount of the money also came out. Many institutions, when they see it falls, they will run away quickly because they want to show the performance or maintain the performance, and they don't want to have stocks in the portfolio if it's falling. And exactly as you see from that time, it fell down through the $10 some change. So even it did better than what we anticipated. Now it's on a rebound. When we have not done anything at all till we see, if you see down there, this is like a 50 days moving averages, I assume, on the top. That is a resistance line on that area between 14 and 15. Exactly. Now with the, of course, fundamental will come into the picture. North American car dealerships or car sales are down tremendously. And there's competition coming in from Sirius and others in the same field. And we feel there is really not that much room for it or potential for it to go up much higher. And we feel strongly that the tepid subscriptions will be detrimental to the company as a whole. And I feel like it's possibility, technically speaking, that the stock may be retesting the old $10 and $11.
Okay, so this 40% increase over the last, let's say, 30 trading sessions, do you think that it could retrace that 40% and that you could regain that? Let's just see if we can zoom in a little bit there and take a look. Now, this is that 40% rise to about $15 a share.
Now, look at the charts. Of course, I don't have the incremental charts that we have at the office, but however, from here you can see is really being accumulated with a very slow volume. Normally is a weak hands. It is not going to get the attention of the institutionals as it did before, prior to reaching 20. So it's very possible there is a weak hand that is bringing it up to 14 and 15. And if the sell-off comes in, it will be very, in the form of the plunge. You can see when the earnings will be coming in, it will not show the strong growth in subscriptions as it has before. For that reason, we feel strongly that possibility is for the stock that probably has to test the 10-11 again.
Okay, now are you short the stock right now?
Short stock right now.
Okay, and are you waiting for this? Now, the earnings announcement date, we're not going to get anything until mid-February. February the 16th is the estimated earnings. Yeah. So you're going to hold on until then at least to find out what the earnings are like.
Exactly.
Okay, now another stock.
Now, I just wanted to sort of emphasize, in any short positions, you would like to have a stop loss because anything can happen. None of these expectations can go through if there is something wrong. Just the opposite of the longs.
Explain for people what that is. I mean, this is a point at which you are going to buy back the shares.
Exactly. You want to make sure, depending on how you would gauge 10%, 30%, or whatever.
And typically right now, I mean, for something like this, what's your stop loss?
17. So we feel strongly, if the stock gets to 17, you don't want to stay with it.
Okay, so anything above 17, you're going to cover your position and you'll go and find something else.
Exactly. You know, in short positions, you always have to have a stop loss. Without a stop loss is very dangerous because anything can happen. Even if it could be acquired, of course, you want to make sure that that will not affect you to lose more money. So therefore, stop loss right now is 17. Anything that gets in that line, you want to cover the position and close your position.
Okay, now do you have the same kind of philosophy for Motherwork? This is another stock that you that you have a short position in.
In every short position, you have to have stop loss, regardless of what they are. Is quite different than being long. In the long, you could probably have a mental stop loss. But in the short positions, you want to make sure that you have a stop loss established according to your view, percentage-wise, of the movement of the stock.
Okay, now in your view, what's the movement of Motherwork? Now, this is the maker of maternity clothes, and it has had quite a decent run. But where are your thoughts on this right now?
That's very good. If you look into the chart right now there, you'll see that the spike that you see, where we consider that as being overextended. And look at the amount of the shares, even in that small chart that you have. Exactly. And you can see this particular lever, as you see down there, how it sold off. Part of that perhaps would be buying, and many of them probably would be selling. It's very difficult to say exactly all of them were sellers. But definitely is indicative that there has been some sell-off done, possibly by the institutions, and many of them possibly by the insiders. There must be a reason why the insiders are selling. Granted that they may be cashing in some money, but definitely does not look with the technical picture of the stock.
Well, just to interrupt for just a second, I have to mention that we did call Motherwork to ask them this question because we told them that you were going to be on and we were going to talk about the company. And they did say that the selling by insiders was part of their normal portfolio adjustment and asset diversification, and that they still ended up with a very large position in the company. So I just wanted to make that clear.
I'm sure they do that. There's nothing wrong with what intention that they have. But they could have done these things on, let's say, in the 30s and the 40s. But that gives you, when the spike comes into the stock in that line, that means it's overextended. And the stock has been shown to be overextended. So they're selling into it, of course, to cash in their money, which they belong to doing so. Nobody can stop it. But in the technical picture, deterioration of the technical gives me the feeling that the stocks may be slide. Because
and do you have a stop loss for this one too?
Absolutely.
What number there? I mean, we're talking about the stock was about 48 cents today. It closed at 41.70. What's your level at which you will exit?
On this particular one, we have 46.
46.
46. So therefore, because on a technical know-how, we sort of try to go over the 50 days moving averages, or 10 days, or 20 days, or 200 days, depending of what the stock's fluctuations is, depending of the movement of the stocks, because each stock acts differently. Retraction on one stocks may be 7 or 8%, but for this particular one has really exceeded the 10%. For that reason, we have gone like about 11% of
11, which is a little bit more.
A little bit more.
Okay. Now, another company that you're short is Williams-Sonoma. This is much more a retailer of home products and some food items. Why are you short Williams-Sonoma?
Again, home buildings is, of course, has a stop. The starts I'm talking about, not the existing building, but the starts have a stop. Definitely, that was ammunition for something like Williams-Sonoma for the homeowners to go and buy furnishing or anything, or utensils, or anything that to do with the home furnishing.
So this started as a kind of a macro play.
Exactly. And for the time being, we don't see that much of it. Startups as such, and the home building is down. Granted that there may be some turnaround coming in, but normally they are the sort of a laggard. They don't really start up to come back up again to make up the loss. And fundamentally, the company's earning has plummeted almost 29% in earnings, and also the same with the sales. Indicative to me is that the stock will fall. Now, if you see in the chart, it did fall down before. You're always going to have some retractions of accumulations for the rebound. The rebound is too shallow. It's within the charts patterns between the 50 and 200 days moving averages. It will take very long time for this stock to get through. Look at the chart. Look at the volumes right now. You'll see the volumes is actually sliding in this from the first plunge is really shallow, that this is not going to be stable enough. It will take some more time for this stock to go back up to that area. For that reason,
and what's your stop loss on Williams-Sonoma, just so that people see where you're not willing to play?
Exactly, 36.
36.
Yes. In our judgment,
about 4 points away.
4 points away. You don't want to be losing more if that thing goes against you. Definitely, a stop loss is a very good vehicle to go short in.
Okay, so 46, the stop loss on Williams-Sonoma.
Exactly.
Okay, hang on, Joseph Parnes. Sure. We've got to take a little break, but when we come back, we're going to find out what Joseph Parnes actually likes. We're watching Market Pulse here on Bloomberg. Joseph Parnes of Technomart is still with us. Joseph manages about $80 million. And you do have some longs. You do have some stocks that you do actually enjoy buying. One of them, we're talking about Kaifon. Tell us about Kaifon and what it does and why do you like it? And we brought up a chart of it. You can explain a little bit more about it.
This is very interesting because here's a company, medical supplies into like invasive surgical types.
Mainly for spinal surgery.
Exactly. And look at the way the stock has been doing. Not very much, going back and forth, sort of accumulations in hand in order to be able to go through the resistance lines, what I call 200 days moving averages and of course 50 days moving averages. As you see, they both have merged like around 35, 36. Then there was a sell-off, but all of those with a low volume. As soon as they started merging with another company, which was very much in the same line as they were, you saw a tremendous amount of the accumulations on the charts. And look at here, the stocks is up $10 or so on the pattern that you see right now. That means the smart money institutions are seeing that acquisition probably will bring in more money into the company's coffers. Possibility the earnings growth will be sort of speeded up. So therefore, chances are that in due time, it will go much higher than the $10 that just went up.
But does this choppiness bother you? I mean, when you see a chart like this, I mean, it's obviously if you take this away and you didn't know that this was going to happen, does this choppiness bother you? Do you discount this when you're looking at a stock, or is it really just the last price that worries you?
Well, Well, it's not a last price. What really gives me an impetus to purchase this stock is a tremendous avalanche that has been taking place to increase it, to get away from that choppiness. You see, right now is a new chart area that you see down there. Chances are there will be some sell-off, but you have to watch the volume. As you see right now, the volume is very low. So therefore, in the due time, there may be more accumulation and it will go up much higher. Actually, you want to buy a stock when you see some sort of a spike, which is going way ahead of all the resistance line that you had before. So that does not bother me at all.
Okay, now another company I know you want to talk about, this makes irrigation equipment. This is Lindsay Manufacturing, correct?
Right.
Why do you like Lindsay?
Well, first of all, it has been very successful in bringing a new modern era of the irrigations to the farmers. So therefore, it's like a replacement of the Mother Nature, if in case there is no rain, and has been successful. Now, the nature of the LNN is not the same as a Kaifon as we saw before. The chart pattern for that is much more steadier, is not as fluctuations on a much high beta as we are in the field. So therefore, you want that one for something in the longer term that eventually the earnings pattern is for it, and the stocks is making new highs. And whenever the stock making a new high, that may be continue going on because there is a promise in the field of the institutions and others that earnings of this company are going to stay, and it has.
But how did you find this? I mean, if the charts are so different and the characteristics of the price movements are so different, how did you actually locate something like a Lindsay?
Well, we look into the chart pattern of many stocks because of our nature of the newsletter. We look into perhaps close to 300 shares, 300 stocks of different types. Some of them very volatile, some of them not as volatile, depending on how the movement goes into the stocks. Once we sort of flag them out on fundamentally first, that they are having a good earnings or they have good positions in the marketplace, good market shares, good penetrations, we sort of single them out. And then, of course, we look into technical nature to see how the technical accumulation.
Is that how you found the next one? I mean, ATI, we'll just take a quick look there.
Exactly.
ATI. Now this makes cobalt alloys. It deals with metals.
Exactly.
Metal company.
And this exactly shows very much what I just indicated. Here is a stock that has been going in over these 50-day moving averages and above the 200-day moving averages. All these times, it catches the interest of the institutions and others when they're realizing that the market share is enormous in this particular company. The profit margins probably is high, so therefore the accumulations goes up. And if there is even some shorts outstanding on it, they have to cover the positions because it's thinly traded when it goes up over the 50 days moving averages. And you see the volume is behind it, exactly what we just talked about Kaifon. Here is a tremendous surge, little bit of consolidations. The next move is another surge.
All
so
right.
ATI is one of them.
Joseph Parnes, thank you very much talking about Allegheny Technologies. We'll be back right after.